Hello, very good morning to all and happy Friday. I'm Kelvin here. Very good morning. Welcome back to today's Daily Dose of Market Insights. Today will be Friday, the 11th of July, 2025. So as usual, before we kickstart our gist of today's Daily Dose, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, before we jump straight into the short-term intraday technical outlook on the four major US dollar pair, the major stock indices, and as well as the two key commodities market, gold XAU/USD and the West Texas crude oil that we cover on a daily basis, let's have a quick recap what has taken shape yesterday in terms of news flow, economic data release, and as well as early today's Asia session related news flow and data release as well that has a significant impact on the intraday cross asset movement. All right, so let's start with the movement of the major US stock indices overnight. All right, so I will say that yesterday movement on the US stock indices is rather I would say choppy. All right, so indices trying major US stock indices trying to actually rally yesterday at the start, but after 2 a.m. Singapore time, the rally starts to patter down. All right, so the SPX managed to hit the close to the previous 3rd of July all-time high again, but can't make any break away or break above the all-time high and starts to see intraday pullback at the last hour of the trading session in the US session yesterday. So that's between 3 a.m. Singapore time and 3:30 a.m. Singapore time to 4 a.m. Singapore time. So yesterday, I would say it's a rather choppy sideways movement on the major US stock indices in general. So at the end, the SPX managed to gain by positive 0.27%. The technology mega cap centric Nasdaq 100 underperformed with a negative 0.16% loss yesterday. So if you look at the Nasdaq 100, very similar as well. It tries to rally, try to retest the 3rd of July current fresh all-time high. Then thereafter, the rally pattern off at the 2:30 a.m. mark over here, and it starts to see a dramatic half an hour intraday push down between 3:30 a.m. to 4 a.m. Singapore time today. That was actually the last half an hour of Thursday US session, which is on the 10th of July. And the top performers are the Dow Jones Industrial Average and the Russell 2000, both up by 0.43% and 0.48%. So if you look at the heat map of the S&P 500 over here in Finvis, all right. Okay, give me a couple of seconds to load the chart. Yeah. Okay, so what we could see, come on, yeah. So there is some pockets where the mega cap stocks, actually mega cap technology stock underperform. So Microsoft was down negative 0.4% yesterday, Amazon negative 0.13%, and Meta down by negative 0.76%. After 2 days of the prior day of stellar push up by Nvidia, Nvidia managed to actually inch higher, but not so the momentum is not so great as a day ago, which is up by 0.75%. And also what's interesting over here in today's Asia session, we start to see the S&P E-mini futures and the Nasdaq E-mini futures inching down lower as we are speaking right now. So the E-mini futures right now is actually down by negative 0.34%. So there was actually a dramatic sell-off at the start of today's early Asia session at 8 a.m. Singapore time. So you look at this steep plunge, intraday plunge within that 1 hour mark. Similar for the Nasdaq E-mini futures as well, which is down by negative 0.3%, almost the same magnitude as the E-mini S&P E-mini futures. So what causes this dramatic sell-off, right, in the 8 a.m. to 9 a.m. hours Singapore time? Today's Asia session is on again related to trade tariffs news flow, and this time the market reacted quite negatively in terms of the S&P 500 and the Nasdaq 100 E-mini futures, because Trump all of a sudden he said that previously there was some signs of hope that US and Canada trade negotiators is coming to some agreement, but Trump suddenly released his report in his he released his so-called highlight in his social media post at 8 a.m. Singapore time today, stating that he will actually slap Canada with a 30% tariff. So he threatened Canada with a 35% tariff, and that is higher than the 25% tariff that was actually being we call it conveyed during the April Liberation Day. And also on top of this higher threatened Canada with these higher tariffs of 35%, he also floats an idea of the higher global tariff rate. Still recall that we have the reciprocal rate, which is the higher one, and we have the base rate, which is 10%, that is being slapped across all US trading partners. So Singapore also is being hit by the 10% base tariff, but we do not have fortunately, we do not have a higher reciprocal rate. But however, right now he has this idea that he's up his rhetoric, stating that he will actually potentially impose a higher base tariff of more than 10%. So based on this report over here, where was it? Yes, okay. So he also spoke to NBC News yesterday. Okay, Trump's announcement came as he told NBC News Thursday, which is yesterday's US session, that he is eyeing blanket tariffs. Blanket tariffs is the base tariff of 15% to 20% on most trading partners. So that is actually above the global baseline minimum tariff that is being what I call implemented now on all US trading partners, which is 10%. So that actually seems to us that Trump is not backing down on his hawkish trade rhetoric, which he actually kickstarted at the start of this week, where on Monday evening Monday US session, I would say he released a slew of trade tariffs demand letters to all to various US trading partners. So far the hardest hit was Brazil with I think 40% if I'm not wrong. So let me have a quick recap again, because there's so many tariffs news flow going on. Brazil tariff, all right. So yeah, so Brazil is the one that has the highest hit so far. Trump demanding a 50% tariffs on Brazil exports heading into US. If nothing is being done or nothing is being agreed on by the after the 1st of August deadline. All right, over here. So the market reacted negatively in terms of the Nasdaq 100 E-mini futures and the S&P 500 E-mini futures. Both they are down. So, but however, if we go deeper down into the Asia stock market, so the Asia stock market is rather mixed. So later I'll explain to you why, because the savior is China. Okay, later I'll explain why. Okay, but let me touch on the performance of the Asia Pacific stock market indices right now. So Nikkei 225 doesn't down by so much as compared, it doesn't down by negative 0.5%, it's just down negative 0.13%. And what's interesting over here is that even though Trump threatened with this higher base tariff, Hang Seng indices are immuted. So the Hang Seng indices, all of them are actually up by 1.26%, more than 1%, and that is a very, very strong push up intraday push up that is being seen so far this week. All right, so still recall at the start of this week, we are still bullish on the Hang Seng Index from a technical perspective due to the various positive technical elements that I have been keep highlighting on my daily dose every day. So they are actually moving according to our expectation, and in fact the Hang Seng Index already hit our short-term resistance level as we are speaking right now, which I highlighted yesterday. So the Hang Seng Tech, which is the China big tech stocks, benchmark up by 1.21%, and the HSCI, which is the which is the China benchmark China H shares benchmark. So take away that is the benchmark for China shares listed in the Hong Kong Stock Exchange, up by 1.18% as well. And the mainland China's A shares benchmark, which is the CSI 300 index, is up by 0.6%. And going down to the rest of Asia, also rather positive. The Kospi 200 index, which is the benchmark for the South Korea stock market, is up by 0.2%, almost unchanged on the TAIEX, which is the Taiwanese stock exchange benchmark. And the Singapore STI continues to be rather outperforming in the region, continues to actually today should be on track for the 5th consecutive session of fresh all-time high. So right now it's going to print fresh all-time high at 4,097, up by 0.5%. And the rest of the other Asia stock market benchmark indices also rather positive. This is Indonesia 30, which is up by 1%. Thailand SET index, which is the benchmark for the Thailand stock market, index up by 0.85%. And even KLCI, which is the benchmark for the Malaysian Bursa stock market, is up by 0.28%. And Australia 200 kind of underperformed, but not that much, only down by negative 0.11%. And Nifty, India is not open yet until I think probably about 1 hour, 40 minutes from now. That was yesterday price performance. So one of the reasons why Asia stock market is more resilient right now compared to, despite the fact that Trump keep on threatening with his rather hawkish behavior on getting US trading partners to actually abide to US requests. And most importantly, I believe that one of the requests that Trump's want is to contain China products and as well as China technology advancement by not getting so-called their related relevant higher tech semiconductor chips and relevant semiconductors in this ongoing high-tech AI rivalry between US and China. So the fact that why Asia Pacific is so resilient is all thanks to China, because there is some kind of unverified report stating that China top planner may start to jumpstart the Chinese property market next week. So what do I mean by this? By looking at this Bloomberg report, Chinese property stats jumped first yesterday. All right, so due to the high speculation, fueled by speculation that a high-level meeting will be held next week to help to revive the struggling sector. So we know that the China property market, right, has a significant wealth concentration by Chinese participants. That means, put it away, that a majority of retail investors in China has their wealth being tied up significantly to the Chinese property market in the last 10 years rather than the stock market. So if there is going to be a potential high-level meeting that will be held next week to help to revive the property sector in China, that could be a potential significant positive feedback look back into risk assets that are tied to the Chinese stock market or the Chinese economy. So that actually explained to us why the Hang Seng indices continues to rally and the China stock market continues to hold firm despite Trump's hawkish rhetoric on the US trade tariffs front that kickstart early this week. So there was this unverified social media reports in China stating that there could be a possible high-level meeting that would be the reminiscent of the Central Urban Work Conference held in 2015. So this 2015 Urban Work Conference is where the China top policymaker pump in liquidity into the Chinese property market, and that also lead to a significant recovery in the China A shares, and as well as a positive feedback loop back into the Hong Kong stock market as well. So at that point in time, the event was the first in its decades and was attended by President Xi Jinping at that point in time. So market is speculation that this next week meeting could be a possible resumption in the development of shanty town areas, which triggered the purchasing of property stocks. So the property stocks yesterday led first, and thereafter it followed this positive feedback loop into the entire China stock market today, and lead to a positive feedback loop as well into Hong Kong. And we know that China, if the China's economy starts to see liquidity that's being pumped into a significant sector of their economy, which is the property sector, that also potential sees a so-called a positive net impact on the other Asia Pacific region, especially the ASEAN stock market. Why? Because ASEAN in the last few years has very close trade ties with China. And also what's interesting over here is that despite the fact that we know that today's that Trump so-called threaten of that 35% higher tariff, let me very quickly share with you this news flow again, that 35% tariff on Canada, and as well as float the idea of a higher global tariff rate, which is the universal baseline rate, up to 15% to 20% from the earlier baseline of 10% that was announced earlier in April. In the FX market, things are also rather mixed right now. So in the FX market, if you look at it right, so this is the 5-day rolling performance here over here. So right exactly at the start of the Asia session at 8 a.m. when the news flow was released, the dollar actually jumped. The dollar jumped, right? So the dollar jumped the most against the yen, which is up on the 5-day rolling performance, up by 1.67%, and also starts to jump against the euro, for sure, the Canada dollar, the sterling dollar as well, and also against the Swiss franc. And what's interesting over here is that the dollar is muted against the CNH. Why? Because of that China potential we call it meeting, where next week, where top China policymaker may announce stimulus plans to jumpstart the Chinese property market. So that also causes the dollar to be muted against the Chinese yuan, and most importantly also muted against the Aussie. So the Aussie dollar didn't actually rally. The dollar didn't actually rally that much against the Aussie. All right, so in fact after that you see a push up, then the dollar strength starts to dwindle down against the Aussie. So one of the reasons why is because Australia is also a key trading partner with China. So if the China top policy makers starts to really inject liquidity into the property market, so the property market is one of the culprit that also causes the rather weak inflation data in China, then also causes that deflationary risk spiral as well, that is more pronounced in last year, even though deflationary risk spiral has started to diminish a fair bit in the Chinese economy at the start of this year, but they are still there. So if we start to see the what you call it, the putting the plug on deflationary risk that is spilling up from the property market, eventually that could actually see a push up in Chinese consumer sentiment, and eventually that could potentially lead to much more retail spending, hopefully. And with that, given the fact that Chinese economy, or the China economy, China imports a significant mineral resources from Australia, and if China growth starts to pick up due to the stimulus plan to actually jumpstart the Chinese property market, that indirectly could be beneficial to the Aussie dollar. So that actually explains why the Aussie dollar didn't fall so much against the USD in today's Asia session over here. All right, so we start to see a K-shaped performance in the FX market as well. And very obviously, if you look at the 1-day rolling performance, we could see this K-shape over here. All right. So with that, and very interestingly, let me take you to some Federal Reserve official speech yesterday. So yesterday we have two Federal Reserve official speaking. One is this Fed Musalam over here. So Musalam say that it's still too soon to know tariffs impact on inflation. So he's not skewing towards the dovish side of the camp. And even another Federal Reserve official, Daly, she said that yes, even though tariff price hit may be muted rather than feared by her colleagues, but she only see 2 cuts in 2025 at the most. All right, so with that, that actually also explained to us the CME Fed Watch 2, very low chance that the Fed will do a cut in the upcoming July FOMC meeting, which is going to be held in I think 3 weeks time, 30th of July. So market is still now pricing in almost 95% chance, or I would say 100% chance that the Fed will maintain the Fed fund rate at 4.25% to 4.5%. So no cut, just stamp it. Right, and if you go down the calendar for the next few meeting, the chances are still remains the same after what has taken shape so far. 70% chance is looking for the first cut to come in the September meeting, which is 7th of September. Then thereafter, after the first cut likely to be enacted on the 17th of September by 25 basis point to bring the Fed funds rate to 4% to 4.25%. The Fed funds futures traders is expecting no cut in the October meeting, which is the 29th of October 2025 FOMC meeting, because a rather high chance of 67% to be stamped, only a low probability of 33% chance that the Fed may cut further to 3.75%. And we see a higher chance of the Fed igniting the second cut on the 10th of December FOMC meeting, where the Fed funds futures trader now is assigning a high probability of 93% for the Fed funds rate to be at 3.75% and 4% by the end of 10th of December FOMC meeting. So to be implied, overall, there is only potentially 2 interest rate cuts so far that is being priced by the Fed funds futures market, in line with US Federal Reserve officials' median projection that is being penciled in the latest dot plot release in the June FOMC meeting. Right, so nothing really changes much in terms of the Fed funds rate. So the only things that potentially the expectation might change is that if Trump were to actually announce a shadow Fed chairman or chairwoman before Q4 this year, or somewhere in Q4, that means i.e. in this year before the start of 2025, because we know that Powell terms end in May 2025. So if the White House administration starts to name Powell's successor before his terms end, that means in somewhere around in Q4 this year, then that potentially could skew the Fed funds futures contract expectation. All right, why? Because market participants will now be hearing more on the views of that shadow Fed chairman if Trump were to appoint him or her in Q4, 3 months before Fed Chair Powell terms end in May 2026. All right, so that pendulum may start to change, because very likely the successor of Powell will be very dovish. So that could actually potentially see an impact on the change in the probability of the Fed funds futures rate expectation, because market participants will be hearing more about that shadow chairman views instead of Fed Chair Powell views. All right, so that also could impact the dollar as well. I share with you guys, on the intraday basis, we may see bounces in the dollar strength for some pair, but the longer term picture of the dollar is still on a downtrend. All right, so that sum up the first segment of today's daily dose over here. So now let me touch on the second segment of today's daily dose, which is the intraday technical outlook on the broad-based cross asset classes, starting with the FX market. So with that, let me expand my screen so that you guys could have a better view of the charts. All right, good. So let me start with the FX market first over here. So over the FX market, okay, let me touch with the euro dollar. Okay, so the euro dollar, what we could see yesterday, initially at the start of the Asia session, we have a bullish bias over here, but the price action can't hit the first resistance level at 170.70, and it starts to trade downwards. What's interesting over here is that it now starts to trade below the median line, distorted line of this medium term ascending channel from 13th of May 2025 low over here. So with that a possibility, there could be a risk that it may start to actually float much lower towards the medium term ascending channel support area at the 115.80 level. All right, so with that I would be not so we call it the the conviction to have a bullish bias view for today has been greatly reduced after what has taken shape yesterday in the movement of the euro dollar. So with that, I will have a bearish bias instead for today, using yesterday's breakdown of the median line, distorted dotted turquoise green line of the medium term ascending channel, where it broke down yesterday and has a significant intraday sell off that kickstarted from 7, give me a minute, yeah, 7 p.m. Singapore time all the way down to 11 p.m. Singapore time, before there was a minor bounce throughout the US session. So with that bearish price action on the euro dollar on the intraday basis yesterday, I will now flip to a intraday bearish bias for today, using 117.30 as my short-term pivotal resistance level. Potentially there could be some form of residual minor corrective decline before the bulls come in to support the euro dollar again. Intraday support level to watch 116.30 followed by 115.80. So 115.80 is rather key because it's coincide with the medium term ascending channel that is from 13th of May 2025 low. However, if price action managed to shape a bullish reversal and an hourly close above 17.30, so that's also coincide with the this minor descending, oops, sorry, this ongoing minor descending trend line taken from the high of minor high of 3rd of July as well. Right, so if it's able to break up above 17.30, 117.30, today's intraday bearish bias will be invalidated to see the honors flipping back to the bulls, at least on the intraday basis, exposing the first resistance. The next resistance level to watch will be 117.30. Above it, revisit 118.10 slash 118.25, which is the minor swing high of 1st of July, before this ongoing minor corrective decline kickstarted. So that's for the euro dollar. Next up will be the sterling dollar. So the sterling dollar also did that sell off, which takes shape at the 7 p.m. Singapore time all the way down to the 10 p.m. mark yesterday, right? So what we could see over here is that it also starts to break down below the 20-day moving average after trying to trade above it in the Wednesday and Thursday session, but not successful, and thereafter it broke down. So with that, I'll be using yesterday's European session high, which is at 136.25. So using 136.25 on the sterling dollar, for today, I have no conviction that it may now shape that desired bounce as expected 2 or 3 days ago. So with that, I will have a intraday bearish bias for a residual minor corrective decline push down, using 136.25 as my short-term pivotal resistance level. First support level to watch will be 135.30 for today, which was yesterday's minor swing low that got to survive during the US session, and the minor swing low on Tuesday, which is managed to survive as well. But because of the bounce of it the 135.30 is not convincing enough to state that we may be on the start of a bullish recovery as initially anticipated. So given this latest price action on the sterling dollar, my conviction for that bullish recovery has been reduced. So there could be a risk of a residual push down for this ongoing minor corrective decline that is still intact since 1st of July. So using 136.25 short-term pivotal resistance level, flip to a bearish bias for today. 135.30 first support level to watch. A breakdown below it sees the next near-term support zone coming in at 134.90/134.70, which confluence with the 50-day moving average as well. However, if price actions did a U-turn and a bullish reversal and an hourly close above 136.25, today's bearish bias will be invalidated to see a recovery scenario, at least for a retest at 136.70, 136.90. Above this level, increase the odds of the recovery towards 138 figure/138.30 next. So that's for the sterling dollar. Next up will be the Asia Pacific currency against the dollar. So that will be starting with the Aussie dollar. So the Aussie dollar continues to be resilient. So despite that initial sell-off upon hearing that so-called Trump's idea of that 35% tariffs on Canada and threatened with a higher global baseline tariff up to 15% to 20% from 10% initially. But the Australia dollar continues to be remains resilient, managed to actually shape a bullish candle after that black candle, and now attempting to recover and almost erase off of that tariff news flow driven sell off that kickstarted from 8 a.m. Singapore to 8 a.m. to 9 p.m. 8 a.m. to 9 a.m. Singapore time, pardon me, because of that potential Chinese we call it meeting that may take place next week, indicating that policymakers may unveil some stimulus measures to jumpstart the Chinese property market. And if that were to take shape, that could be rather positive for Australia economy, like I explained earlier in my first segment of today's Daily Dose. So also from a technical perspective, there is no elements to actually support a bearish bias view for the Aussie dollar at this moment in time. So firstly, we start to see the Aussie dollar bouncing off from a parallel trendline ascending channel support at the 50 level mark over here on the hourly RSI, indicating that upside momentum still remains intact. So with that, I will be using 65.40 as my short-term pivotal support level, given the fact that he hasn't cleared above the 66 psychological level yet after a test of it on yesterday's early today's Asia session before that intraday sell-off take shape at the 8 a.m. to 9 a.m. Singapore time. So above 66 figure level exposes 66.30/66.45 next, which is also the Fibo extension. Sorry, which is also the Fibo extension level of 2 times. All right, so only a bearish breakdown below 65.40 short-term pivotal support that would negate the bullish tone to see a retest back at the 20-day and the 50-day moving average again at 65.10 followed by 64.80. So for now, still maintaining our intraday bullish bias on the Aussie dollar using 65.40 as my short-term pivotal support level. Next up, lastly, will be the dollar yen. So the dollar yen continues to trade higher as we are speaking right now. So it didn't actually shape that pullback as intended, where we have yesterday, where we have a bearish buy for it to retrace down to the 20-day moving average at 145.10. It continues to burst up over here and broke above the pivotal resistance at 146.55. So given that breakout of that pivotal resistance that we have yesterday, I got to respect this bullish view, at least on the intraday basis, or the bullish price action on intraday basis, for the dollar yen to actually float up to the upper limit of that sideways range configuration that is still in place since the low of 22nd of April. So this is the upper limit of the sideways range configuration over here. So with that, we'll be flipping to a bullish bias within this sideways range configuration using yesterday's low at 145.85 as my short-term pivotal support level. Resistance level to watch will be 148 figure level, which is the minor swing high of 23rd of June. Above it sees 148.60/149 figure level next. However, if price action starts to push down and break below 145.85, then we may see another round of choppy corrective decline drift towards the lower half of this complex sideways range configuration. In first step, exposing 145.10 first. Below it, potentially sees 144.25 next, which is the next intermediate support. So that's for dollar yen. Given the positive price action that we have witnessed so far in today's Asia session and the break above the 146.55 level, we will now flip to a bullish bias for today to see a potential push up towards the top of the range using 145.85 as my short-term pivotal support level. All right, so that sum up the intraday technical outlook for the major US dollar pair. So now let us turn our attention to the major stock indices right now, starting with the Hong Kong 33. So like I explained, the Hong Kong 33 managed to hit our resistance level at 24,490. So with that, I do not, first support level to watch will be at 24,270 over here, but I do not want to put my pivotal support to be so tight at 24,270, which is this former minor swing high. Now turns into a pullback support. I will use it at this last minor pullback before this sharp rally takes place, which is at 25,005 over here, also very close to the 20-day moving average. So using a slightly adjusted higher short-term pivotal support right now at 24,050. Pardon me, it's not 25. It's a bit of tongue twisting. So 24,050, that will be my adjusted or tighten short-term pivotal support level that I have for now. Higher one, okay, intermediate support level will be 24,270. All right, over here, but I don't put it so tight just in case of any whipsaw. So using a adjusted one from 23,690, push it up to 24,040. So that will be my short-term pivotal support level. So there could be also a risk of a minor pullback taking shape before another new upleg resume on the Hong Kong 33, given the fact that is already at the hourly RSI is kind of at the extreme overbought level. All right, so this hourly RSI is the highest level so far since 6th of March this year. So that's close to about what 4-month higher on the overbought level on the hourly RSI. So given this extreme overbought level on the hourly RSI, there could be a minor pullback taking shape first before a new up leg resumes. So given that potential minor pullback, that also justified me for not having a very tight short-term pivotal support at 24,270. So I'll be using 24,050 instead. Potential minor pullback may take shape on the Hong Kong 33. Then thereafter, the bullish bias view still remains intact. Above 24,490 exposes the medium-term swing high area of 18th of March, 19th of March, 2025 swing high area, medium term at 24,850 next. Right above it sees 25,065 / 25,150, which is the one-time Fibo extension taken from the low of 20th of June, and also the upper limit of this ongoing minor ascending channel that is still in place since the low of 2nd of June. Only a sudden bearish reversal and a breakdown of hourly close below 24,050 that would invalidate today's intraday bullish bias to see a choppy corrective decline movement unfolding, exposing the next near-term support level at 23,690 / 23,450, which coincide with the rising 50-day moving average and the lower limit of this minor ascending channel. Next up will be the Nikkei 225. So the Nikkei 225 continues to trade within this range configuration. So with that, its element seems to be rather mixed right now. Okay, so what I want to do now is perhaps I would flip to a neutrality stance instead. Okay, I also don't want to be outright bearish. Given that it's Friday right now. Okay, so neutral. Okay, that also coincides with the 20-day movement. So neutral between 39,390 and 40,040. So this resistance here has not been taken out since 8th of July, which is the start of this 2 weeks ago, right? And the hourly RSI continues to shape a series of higher, lower over here. So with that, rather sideways movement between these two boundaries, it's a sideways range. So given the fact that it's Friday for today, I do not want to be so aggressive in terms of directional bias. So I will have a neutrality stance for today on the Japan 225, neutral between 40,040 and 39,390. Okay, next up will be the Germany 30 representing the German DAX. So still recall the Germany 30 yesterday, we attempt to play that minor corrective pullback, and the minor corrective pullback indeed hit our support level or support zone at 24,320 / 24,260. So yesterday we do have a bearish bias, but this bearish bias is only looking out for a minor corrective pullback within its medium term uptrend phase that is still intact, and as well as the short-term uptrend phase that is still intact as price action trade above the 20 and the 50-day moving average. And what happened is that yesterday's today this morning a sell-off causes it to actually bounce off the median line of this minor ascending channel that is in place since 20th of June. And if we do the Fibo retracement of that last impulsive steep up move from 4th of July all the way up to this the Wednesday US session high, that coincide with the 38% Fibo retracement, and the 50% Fibo retracement is at the 24,170 level, which also confluence with the former minor swing high of 30th of June. So with that, support level has been met. That means the intention of that minor corrective pullback sequence may have already ended, and also given that the hourly RSI also starts to bounce off from the oversold region. So using 24,170 short-term pivotal support level on the Germany 30 for today, we will flip back to a intraday bullish bias as I explained earlier. First resistance level to watch will be at 24,520, which is this minor congestion area here that it broke down and start to see a steeper corrective minor pullback on the intraday basis. So above 24,520, something like an upside trigger level will increase the probability that the next impulsive up move sequence has come in from the Germany 30, looking out for the next intermediate resistance level to float in at 24,760 next, which is the one-time Fibo extension taken from the low of 19th of June. However, if price action starts to break down further and has a bearish breakdown in hourly close below 24,170, today's intraday bullish bias will be invalidated to expose the next near-term support level at 23,950, 23,815, which is close to the lower limit of this minor ascending channel from 20th of June low, and as well as the 50-day moving average. So that's for the Germany 30. Next up will be the major US stock indices, starting with the US Wall Street 30. So the US Wall Street 30 yesterday managed to pierce above our pivotal resistance level at 44,550, but can't break above the minor swing high of 7th of July, and as well as the median line of this minor ascending channel in dotted light turquoise green now turns into a pullback resistance at 44,850. Hourly RSI is rather positive. Price action on the hourly RSI continues to be held above this parallel ascending trendline support level. So with such mixed element, I will flip to a neutrality stance for today on the US Wall Street 30, neutral between 44.85 and the lower limit of the neutrality range, which price action managed to survive since Tuesday, will be at 44,170. So neutral between 44,850 and 44,170 on the US Wall Street 30. Next up will be the S&P 500. So the S&P 500 managed to get rejected off the pivotal resistance that we highlighted, 62.90. And what we could see over here is that the hourly RSI seems to be breaking down or parallel ascending trend line support, and now looking to retest at this line right over here. So and what you could see is that the hourly RSI continues to print a bearish divergence. Okay, price action shape potential minor higher high. Okay, but the RSI shape a much more obvious lower high. So with this negative element that is being portrayed on the hourly RSI, that indicating the lack of bullish momentum, we will be still having that potential bearish bias for this potential minor corrective pullback sequence to unfold on the SPX 500 using 6290 or 6290 as my short-term pivotal resistance level. First support level to watch remains the same at 6220. Only a breakdown below it exposes 6180, followed by 6,136, which confronts with the rising 20-day moving average. However, if price action starts to pierce up, have a clear breakout above 6290, then today's intraday bearish bias, today's intraday bearish bias will be invalidated to see a squeeze up towards a fresh all-time high area at 6,330/6,355, followed by 6,370/6,380, which is being defined by Fibonacci extension cluster levels. All right, lastly will be the Nasdaq 100. All right, so the Nasdaq 100 also faces the similar situation. Price action on the hourly RSI broke down a parallel ascending trendline support. Now looking to retest this parallel ascending trendline support, now turns into a pullback resistance. The hourly RSI continues to print out a series of lower high over here, okay, indicating the lack of upside momentum. So with that, still no change. Price action yesterday got rejected at the short-term pivotal resistance level again for the, I think, third time running. So no change, maintaining our pivotal resistance at 22,920. Maintain that potential intraday bearish bias view for that potential minor corrective decline sequence to unfold. First support zone to watch will be 22,600, 22,510. Only a breakdown below 22,510 may expose 22,360/22,235 next, which confronts with the rising 20-day moving average as well. However, if price action have a bullish breakout above 22,920, today's intraday bearish bias view will be invalidated to see a squeeze up and a continuation of the impulsive upmove sequence, focusing on 23,190 next, followed by 23,400, 23,480, which confluence with a Fibo extension cluster level. All right, so that sum up the intraday technical outlook on all the broad-based cross asset all the major stock indices, which is having a mixed bag performance right now. Pardon me. Now let's focus on the commodities market, starting with the gold XAU/USD. So for gold XAU/USD continues to inch higher in light of that trade tariffs trade by Trump reacting positively, and the hourly RSI also starts to shape a test and a rebound of that former descending trend line resistance over here. So with that, I would now tighten my short-term pivotal support level higher at 3,307 from 3293/3282. So this will be my tighten short-term pivotal support level on the gold. 3307. Okay, as price action trade back above the 50-day moving average as well. 3307. Okay, so this will be the normal support level next. Okay, so let me do a bit of adjustment, tidy up for a while. Okay, so 3307 over here. Okay, let me put it down. 3307 will be my tighten short-term pivotal. Okay, let me put it here. 3307. Okay, give it a back. 3307. Okay, 3307 will be my Titan short-term pivotal support for today for gold XAU/USD. Still maintain that bullish bias as you continue to inch up towards the upper limit of this complex sideways range configuration, a minor one since the high of 3rd of July. So right now, upper limit of this complex range configuration will be 3345, which is the 20-day moving average, and the minor swing high of 3rd of June 3rd of July, pardon me, at 33.60. All right, so this is the next intermediate resistance zone to watch. So only a clear bullish breakout above 33.60 will increase the probability of the start of a new impulsive up move sequence. That means very clearly this is something like a cup and handle bullish breakout. Above it sees 34,000 next, 3,400 next, pardon me, 3,400 next. All right, only a bearish breakdown below 33,070 will invalidate today's bullish buyer's view to see a retest at 32,093/3282. A breakdown below 3282 will see a deeper corrective pullback to revisit the 30th of June minor swing high at 32.50 next. So that's for gold XAU/USD, still maintaining our bullish bias within this range configuration using a tightened short-term pivotal support at 33.07 for today. Lastly will be the West Texas oil. All right, so the West Texas oil continues to plunge lower and break below our first support level at 67.80. Now turns into a minor pullback resistance at 67.84 over here. So with this breakdown of the first support level, I would tighten my short-term pivotal resistance level to 69.15 for today. Okay, let me put it in writing. Okay, 69.15. Then this will be the normal resistance next, 70.60. Okay, so this will be the normal resistance next. Okay, tighten it to 69.15, which is also close to the 20-day moving average. I think it's a resistance as well. So maintain our intraday bearish bias within this sideways range configuration. 69.15 short-term pivotal support resistance level, 69.15 short-term pivotal resistance level for West Texas oil. Support level to watch will be the lower limit of this sideways range at 60.10, followed by 65.20. We also confluence with the 50-day moving average. However, if price action stage a breakout above 69.15, today's intraday bearish bias view on the West Texas oil will be invalidated to see a squeeze up to revisit 70.60 next. All right, so that's for West Texas oil, and also sum up the intraday technical outlook on all the broad-based cross asset classes. So before we go, let's have a quick look at the economic calendar. What are the key data to actually look out for today? So today will be Friday over here. So Friday today will be actually a very quiet session as well. So in terms of economic data release, only one that I want to share with you all to highlight will be at the start of the European session at 2 p.m. Singapore time, where we see the release of the UK monthly GDP data for the month of May. Right, so that could potentially influence the sterling dollar and the sterling the sterling crosses, and as well as the UK 100. Then followed by some speeches by ECB officials. ECB Sapolon will be speaking at 7:30 p.m. Singapore time, and those who have interest in the dollar Canada and the CAD FX cross, the CAD crosses. Australia key labor data will be releasing at 8:30 p.m. Singapore time, which the unemployment rate and the unemployment rate, followed by the employment change. So employment change, market expecting a very low number, 0 jobs added for the month of June, and the unemployment rate likely to tick higher by 1 basis point to 7.1% from 7% in the last print in May. Then thereafter will be a rather quiet US session. All right, so with that, that sum up today's daily dose of market insights. It's a bit long for today because there are a couple of key coverage that I want to cover given today's rather mixed bag of performance across the different cross asset classes, which I mentioned earlier. So with that, do have a great Friday ahead, and I also wish you all a great and restful weekend, and we shall speak again on next Monday. Thank you.